Good morning, friends. I am Devarsh Vakil from Retail Research of HDFC Securities. Today, we are discussing our fortnightly market outlook in this webinar. First, I will discuss how international markets have behaved, how Indian markets have fared over the last fortnight and last 1 month. Then I'll hand it over to my colleague Vinay, who will speak about technicals. And then finally, we will hand it over to Gandish, who will discuss markets from a derivative perspective. So let's straight away jump into how international markets and local markets have behaved. So as you can see from your screen, the American markets are more or less flat over the last 1 month, while international markets have had a decent month. DAX is up by 6% and Hang Seng is also up by 6%. Similarly, mid cap and small cap have had a correction, but Sensex and Nifty are up by 1 and 1.5%. Let's look at the what has happened over the last fortnight. So as you can see, after a correction, all the international markets are rebounding over the last fortnight. Similarly, small cap and mid cap are now flat. Sensex and Nifty are up about 2% over the last fortnight. So after a steep fall, markets have recovered gradually over the last fortnight. Most important question for the global markets now is whether US Federal Reserve be able to rein in the inflation without causing the recession. We see that the US Fed is going to hike the interest rates by in next two meetings by 50 basis points. After that, the higher interest rates, will it affect the markets or not? That is what is the most important question. Now, we saw two prominent people. One, Jamie Dimon from JP Morgan. He is saying that the economic hurricane is coming. Elon Musk has said that he has a super bad feeling about the global economy and is planning to lay off 10% of his workforce. So these are the worrying signs which are emerging from prominent people. While when we see the economic data on Friday, the employers actually added 3.9 lakh non-farm payroll jobs, the consensus expectation of 3.2 lakhs. So employers are actually adding good amount of jobs in US economy. It is not showing any signs of slowing down. So Fed is trying to cool the economy while economic data is good. And as we have seen in previous webinars, good economic data when Fed is trying to cool economy is bad for the markets, and that's why we saw that the US markets have corrected yesterday. So as you can see from the screen, this is the S&P 500. From its highs of 4,795, it has come down. It almost brushed to bear market territory. 3835 below, it will be entering into the bear market territory. 3950 is a good support as we have been pointing out, and it has a nice rebound from the support. 4316 is the key important level. Whether it is able to breach this level and then get back into the above 4300 level territory, then we will see that this downtrend is over and market is now resuming a new uptrend. Over the next fortnight, markets are likely to trade between this 3950 and 4316, and let's see where this market goes. If US is encountering an inflation spiral, if it is going to have a higher interest rate hike and eventually a recession, then obviously this support will be broken and it will enter into bad territory. But if Fed is manages to cool off the economy with higher interest rates, and then again we start a new growth cycle, then the markets will break this 4316. So 4300 and 3900 are two important levels for next fortnight for American markets, and this is the mother market. Most of the markets around the world will follow this. Let's see what has happened into Indian markets. So as we can see, the last fortnight, IT, automobile and technology stocks have started rebounding. They had a nasty fall and then a slight recovery. While still some stocks like in power, metal are still struggling, and that's where the focus should be. If metals are able to rebound along with the PSU stocks, then only our markets has a legs to move up. My colleagues will share more about this in their portion. So what are the key events to watch out for? First, the MPC meeting is scheduled between 6 and 8. So on 8th of June, RBI meeting, MPC policy committee will meet. Most of the people are not expecting any interest rate hike now because they have had a surprise rate hike, but they have said that their outlook is to increase the interest rates. More importantly, the US Fed is going to meet on June 14th and 15th, and again on July 26th and 27th. And they have already said that they are going to increase interest rates by 0.5% on June 15th and on July 17th. So 1%, 0.5% each on July and June is given. Now, what Fed does after the July will drive the international markets. Apart from the RBI policy on 8 June and FOMC meeting on June 15, ECB is meeting on June 9, BOE is meeting on June 16, and Japan BOJ is meeting on June 17. So these are also key important policy meetings that we will watch out in this next fortnight. Another important data which will come on June 29th, US GDP data. So that also is an important event to watch out for. Now let's hear from Vinay. He will share his views from the technical perspective. Over to you, Vinay.
Hello friends, myself Vinay Rajani and I'm going to talk about the technical market outlook for the next fortnight. Now let us directly jump to the technical development on the Nifty daily chart. Now this is a Nifty daily chart. We can see over here that Nifty has taken resistance at 16,800, which was derived from the horizontal trend line adjoining the previous bottoms. And Nifty fell more than 200 points on Friday, which was actually a weak sign and closed on a weak wicket also. So we need to remain cautious. Nifty has got strong support from the swing highs, which was at 16,400. So around 16,400, 300 odd levels, we can say that there is a support, and we need to see that whether Nifty is holding this level as a support or not. Below 16,300, things could turn bearish for the short term in the Nifty. Now let us look at the weekly chart of the Nifty. Now overall Nifty has been making lower tops and lower bottoms on the weekly chart. This was the third weekly rise for the Nifty, and from the highs we have seen some selling pressure coming in. So still the overall scenario is still bleak because the lower tops are still there on the weekly chart, and there are multiple resistance which is placed in between 16,800 to 17,000. Now let us move to the Bank Nifty development. This is a daily chart of Bank Nifty, and Bank Nifty has formed a bearish engulfing pattern. This is a bearish engulfing pattern which is considered to be a negative sign for the short term, and this bearish engulfing pattern was found at the strong resistance of the upward sloping trend line. This is upward sloping trend line which adjoins the previous swing lows and highs. So we have to remain cautious because Bank Nifty is looking weaker than the Nifty. Support for the Bank Nifty is seen at 34,800. If 34,800 is getting broken, then we can see a selling pressure intensify towards the 34,000 in the coming sessions. So this is a Nifty mid cap daily chart, and as we can see over here, Nifty mid cap index has made a bearish engulfing pattern, which was formed exactly at its 200 days average and 50 days moving average. So whenever bearish candlestick is formed at the strong resistance which is provided by the 50 days EMA and 200 days EMA, it is considered to be a confirmation of the bearish trend reversal. So not only the 1 day, but mid cap index has actually engulfed the entire last 3 days range, so which is definitely a bearish sign for the short terms, and we need to remain cautious for the coming session in the Nifty mid cap segment. Now let us conclude. Nifty has reversed south from the strong resistance of 16,800 derived from the horizontal trend line and the 200 days EMA. So unless we see a level above 16,800, we need to remain cautious for the market. Bank Nifty has formed bearish engulfing candlestick pattern on the daily chart this Friday, which indicates the short-term trend bearish reversal. Support for the Nifty is seen at 16,300 odd levels, below which bearish trend reversal would be confirmed. Till then, Nifty could remain in the range of 16,300 to 16,800. Support for the Bank Nifty is seen at 34,800, below which we can expect Bank Nifty to slide towards the next support of 34,000. On Friday, Nifty Midcap Index formed a bearish engulfing pattern at strong resistance of 50 and 200 days EMA, which indicates a bearish trend reversal for the short term in the midcap stocks. The bearish sign is again coming from the Brent crude. Brent crude has been rising rising and making higher tops and higher bottoms on the daily chart, and has reached the highest levels for last 2.5 months. So it is going to impact negatively to the Indian markets, and for the rate sensitive sector it is negative. So banking, auto and real estate could remain under pressure because of the rising crude prices. So to conclude, we advise traders to remain cautious for next couple of session in the coming in the markets. Then we have to see whether Nifty is holding the supports or not. So if Nifty breaks 16,300, then chart setup would turn bearish and confirmation would come for the Nifty. Bank Nifty is looking weaker than Nifty. Below 34,800, Bank Nifty could slide down to 34,000. So that is all from my side. Thank you, everyone.
Thank you, Vinay. Now let us hand it over the proceeding to Nandish. He will share his views from the derivative markets. Over to you, Nandish.
Good morning, friends. I am Nandish Shah, Technical and Derivative Analyst at HDFC Securities. I am going to discuss how the market is looking from the derivative side. So let's straight away jump to the presentation. So as you can see on the screen, during the week, we have seen short covering the Nifty futures, where we have seen 8% fall in the open interest with Nifty rising by 1.42%. On the other hand, we have seen short build-up in the Bank Nifty futures, where we have seen 9% rise in the open interest with Bank Nifty falling by 1%. Now let's see what the option data is suggesting. In the option data, we can see that we have seen put writing at 16,300 and 500 levels. Therefore, we believe that on the lower side, Nifty is likely to find strong support in the vicinity of 16,300 to 500 levels. On the higher side, we have seen aggressive call writing at 16,800 levels. So we may find strong resistance around 16,800 levels where we have seen call writing. So as you can see from the chart, we have seen put writing at 16,300 and 16,500 levels, while aggressive calls have been written at 16,800 to 17,000 levels. Now let's see what the FIs have done in the index future. So first of all, long unwinding is seen by FIs in the index future segment. FIs during the week, they have sold worth rupees 1800 crore in the index future, with their open interest going down by 22,000 contracts. And therefore FI's net long to short ratio in the index future has fallen to 0.65 levels from 0.93 levels last week. So in other words, you can say that out of total positions of FI in the index future segment, 60% is in short side while remaining 40% is on the long side. On the other end, in the stock futures, short covering is seen by them, where the net worth rupees 8400 crore with their open interest going down by 75,000 contracts. So as I discussed earlier, you can see from the chart that FIs who were creating longs during the later part of the May, uh, and therefore their long to short ratio has moved up to 1.26 levels. But during the last week, we have seen long unwinding by them. Therefore, their long to short ratio has fallen to 0.65 levels from 1.26 levels on the Monday. And therefore, this is the lowest long to short ratio during the June series, which does not augur well for the market. So same thing you can see here, FIs have reduced their long, but the important thing is that clients have increased their longs. Clients who were reducing their longs during the later part of May now again started creating longs. So on the one side, FIs is reducing long while clients are increasing their longs. So just to conclude, uh, considering that we have seen long unwinding the Nifty future, call lighting at 16,800 levels, long unwinding by the FIs in the index future segment, and weak overnight clues. Our advice is that one should remain cautious till Nifty closes above 16,800 levels. Therefore, aggressive long should be taken only above 16,800 levels. However, on the downside, considering aggressive put writing at 16,300 to 500 levels, we believe that on the lower side, 16,300 level may act as a strong support going forward. So broadly speaking, we are in the range between 16,300 to 16,800 levels. A close below 16,300 or above 16,800 will dictate the clear trend. Till then, keep a stock specific approach. During the last week, we have seen a sharp rise in the Nifty small cap index. Many stocks did well during the week. So our advice is to focus on selective small cap mid caps where there is upside, more upside left, we believe. Now coming to Bank Nifty, as I discussed earlier, we have seen short build-up in the Bank Nifty futures during the week. Moreover, we have seen aggressive call lighting at 35,500 to 36,000 levels. And also technically speaking, yesterday Bank Nifty find resistance at 200-day EMA, which is currently placed around 35,900 levels. Therefore, our advice for the Bank Nifty is to remain cautious and wait for Bank Nifty to close above 36,000 levels for aggressive longs. Immediate support in the Bank Nifty is seen in the vicinity of 34,700 to 35,000 levels, where we have seen put writing. Any close below 34,700 level would result into further long unwinding, which might push Bank Nifty to even 34,000 levels. That is all from the derivative side.
Thank you, Nandesh. Now let us look at how our recommendations have had over the last 1 month. So on the fundamental side, we have had many successes. Some of them are Rupa, which has given us 17.3%, Automotive Excel 13%, Premier Explosive 11.5%, Poonawalla has hit his first target of 7.6%, and Shanti Gears, both targets of 16% have been achieved. On technical side, on e-margin and technical positional trade, we have given many recommendations. Some of the key successful ones are from Jamna Auto, which has given us 11%, to Inox Leisure and Minda VIP, which has given about 6 to 7% returns. So I hope you are making full use of these recommendations. We hope to bring many more such recommendations in times to come. That brings us to the end of this video. I hope it has been useful to you. Do share your feedback. Depending upon your feedback, we will keep doing more videos. Thank you for watching.